Good evening, everyone. Can everyone hear me and can everyone see me as far as my screen goes? If you can hear me and you can see my screen, just type a yes in the chat window so that I will know that everyone can see. Okay, we're going to actually get started tonight. And the title of this presentation tonight is Everything You Wanted to Know About Trading Binary Options, but Were Afraid to Ask. Before we get started, I would like everyone to take a moment and actually read over the disclaimer that is for your protection as well as mine. Okay. And basically, you should never trade with money that you cannot afford to lose. Okay. Okay, we are going to get started. And tonight, what I'm going to be doing is actually showing you how to trade Nadex binary options. Now, if you're not using Nadex, I highly recommend Nadex because they're one of the few that are certified by the CFTC. Okay, there's only two others, one of which does not offer binary options. The other one I do not know, and I've never traded with them. But I have traded with Nadex, and I really enjoy trading with Nadex. Now, how many of you are familiar with Nadex? If you want to type in a message, please do so. It's actually pretty easy to trade with Nadex. Now, the first thing that you have to realize is when you're looking at the binary options, you do have some things that are just really consistent. Okay. Number one, you have a strike price. And over on the right-hand side, you can see that there is, in this case, USD JPY greater than 110.62 by 8 p.m. This is what is referred to as your strike statement. Okay. Now, what identifies the underline is the first part of that sentence, which is USD JPY. Then all of the binaries with Nadex, they are all going to be greater than. Okay. It's not greater than and equal to, it is greater than, period. Okay. So in this case, the USD JPY greater than 110.62. And it has to do it by 8 p.m. So immediately after the greater than symbol is the price and then the time that the binary expires. Okay. Now, immediately to the right of that is a chart icon. You can click on that to bring the chart up. You also have a column that identifies how much time you have remaining in the binary option. That's very important when you're trading binaries because it has to move in your direction within that time period. Okay. Then you have, of course, the date. the bid size, the bid, the offer, the buy, offer size, and then the last time it was updated. Okay. Then you have what is considered the indicative price. That is where price is currently. Okay. So right now there's 110.97 is where it's at. And in this strike, it is 110.62. So will it be greater than? Yes. But this number right here tells you there is only 25 cents remaining in that binary option. Okay. It's going to cost you $1 to get in and $1 to get out. So if you take that binary option, you're going to be down $1.75 because your cost is more than what the binary is worth. Now, when you're looking at the binary options, and let me get rid of these for a quick second. And, well, where did it go? Give me just a minute to find my screen. Okay, when you get rid of a binary option, okay, when you're looking at these, I should say, let me get my screen back to where I had it. Okay. And let's go back and look at the USD JPY. Okay. Now, when you're looking at these, and this is sort of like a thermometer. Okay. And the reason that I call it a thermometer is because if you're looking at the offer size, okay, at the maximum value, that binary is worth $100. Okay. So as price moves up, the highest it can go is 100. Okay. This is in value. When you're looking at the bid size, it goes from 0 down to 100. Well, let me put it another way. It starts at 100 and it goes down to 0. Now, the reason that it goes down is because on the bid side, you're expecting the binary to go down in price. Okay. So if you enter, for example, let's say that you're going to enter the $75 one right here. Where a lot of people get confused is they think they're paying $75. No, it starts at 100 and it goes down. Okay. So if it's going down, what's the difference between 100 and 75? The difference is 25. That's what your risk is. Okay. The 75 is showing you the remaining value of the binary. So in this case, there's $75 remaining on the binary. Okay. That's on the bid side. That's also marked in red. Okay. Why is it marked in red? Because we use red to identify shorts or selling the market. Okay. And a lot of people actually will get confused over that. Now, the offer is for buying. Okay. And remember, this goes up to 100. Okay. So I already know that this is my risk. Okay. And it goes up to 100. So that tells me if I was to buy that, then I have $58 remaining in value. Okay. This is where everybody gets confused on the binaries. Okay. On the sell side, you're always going 100 down to 0. Okay. But on the buy side, you start at 0 and you go up to 100. Okay. All right. Now I'm going to delete that drawing. And we'll get it back to where I had it. And then we're going to actually pull up a chart and see if we can identify a binary option. Okay. So in this case, we're going to go to the USD JPY. We're still going to the USD JPY 6 p.m. to 8 p.m. Okay. Now, I can already tell you the at the money is going to be right between usually 45 and 55 on the buy side. So that would identify 110.98 as the potential at the money. Okay. If I bring up the chart, okay, then I just simply look and you can see that this is the at the money. Why would that be considered at the money? Because that's where price is currently trading. Okay. You can also see that this is the $50 range. Now, to enter an at the money, let's say that we want to go long here. You simply click on the blue, which is the buy side, and you can click on the offer. And you can see now you have an open position. Okay. Well, what if we didn't really want to go at the money because we didn't want to risk $47? The first out of the money is above price because we're going long. So that would incur $36.50 of risk. Okay. So now we have an at the money, which is 110.98, but we also have an out of the money at 111.02. What if we didn't believe the market was going to go up? Okay. Then we could actually do a short. Now, if I do a short at the money, which is currently about $55 of risk, that's going to take me out of this long position. The at the money is going to be the same in this case for long and shorts. It does not matter whether you're buying or you're shorting. Your at the money is going to be the same. But if you're going short out of the money, then you would go one strike below where price is currently trading. That would be the 110.94. Okay. Now, also notice that on the USD JPY, this strike is at 110.98. The next strike is at 111.02. The difference between those two strikes is actually called the strike width, and they're different for every market. Okay. If you go to the nadex.com website and you go to markets and you go to Forex, if you scroll down, you will get to Forex contract specifications. Now, you're the trader here. So it's up to you to actually identify all of the behind the scenes on these binaries. Okay. Nadex provides you the information, but you have to read it. Okay. So if you go to Forex contract specifications and you come down to the Euro US dollar, we're looking at an intraday 2-hour binary option. Number one, it's going to tell you exactly when that binary is available. Okay. So this is hourly beginning at Sunday. The first expiration is 8 p.m. The last expiration is 4 p.m. And there are no 6 p.m. to 7 p.m. expirations, Monday through Thursday. Okay. But then it also tells you the strike width. There's a 4 pip strike width. And that means every 4 pips on a 2-hour binary, there is a strike available. Okay. You typically have 19 contracts And on the daily, which is directly beneath that, you have actually a lot of dailies that are available. Notice that they all have a 20 pip strike width. That simply means that every 20 pips, there's going to be a strike available. But again, each currency is different. For example, the British pound dollar, if you notice this one, it's a 10 pip strike. The USD JPY, 4 pip. The Aussie dollar, 4 pip. But then when you come down to the US CAD, it's a 10 pip strike. In addition to that, the first expiration on the US CAD is open Monday at 10 a.m. That means that the first binary is available at 8 o'clock for a 2-hour binary window. The same thing applies to the British pound yen. 10 pip strike. The first binary expiration is at 10 a.m. Then on the euro yen, you see that the first expiration is 8 p.m. on Sunday, and the strike width is 10 pips. This is very important that you understand the strike width on all of your binaries, because that explains, okay, I know if I'm trying to get in the market at, say, 20, and I'm trying to trade the euro dollar, okay, there's going to be a strike available at 24 that's out of the money. Or if I'm trying to trade the British pound dollar, which was really good last week, then I know it's going to be every 10 pips. So it may be 75, 85, 95. Okay. So you have to know your strike widths in order to trade. So let's go back to here. Now you can see that this binary has already made $7. Let's say that we want to exit that binary. All you have to do is click on it. And if you agree with the sell price, then you click on the sell price. Boom, you're out. Okay. That's just how simple it is. Now notice that I'm still in it. Now I'm out. What was the difference? Price was at 53.75 and my order to exit was at 54. Okay, that means that price had to reach up and touch where I was at in order to exit. Now you can also actually put in an order. For example, right now we have one order at 111.02. That's where we are in our trade. If I click on this blue square, then I can say, okay, if it moves to 75, then I want to exit. Now, I always make sure that under my open positions, you can see this is blue and it says +1. That means to exit that position, I need to sell. And you see that the sale is highlighted. So all I have to do is place order. Now, that's going to give me an open position, but it's also going to give me a working order. Okay. The working order, if the sell price, which is down here at 39.50 right here, if that gets to 75 and there's sufficient buyers and sellers, it would take me out of the market. Okay. Now, that's, you also have the option of allowing the binary to expire. Okay. In this case, the expiration is at 8 p.m. And this is where the indicative really comes into play. You can see down here under the indicative index that right now the current price is 111.002. Okay. It just went to 4. You have that third digit. Okay. That third digit, it makes a difference with the binary. Okay. For example, let's say that we don't have this order, and I'll take the order off, okay? And we opt to let this expire. If we allow this to expire, that means that the price has to be 111.021 on the indicative, which is right here, in order for us to receive the full premium, okay? Now, what would we receive if this actually does expire greater than 111.02? Well, what is 100 minus our average price, which is our risk that we paid on entry? That would be $63.50. That's what you would receive if this expired in the money, which means it expires at 111.021 or greater. On the sell side, it can actually be equal to that number. So let's say that we were short. Okay, if we were short, then if the indicative index expired exactly at 111.02, then we would receive the full payout less what we had on entry. Okay? That's the way the binaries work. What it allows you to do is actually limit your risk on entry. For example, on this one, our risk was $36.50. That means that no matter what happens in this market, we cannot lose more than $36.50. That's what we paid on entry. Now, if it does expire in our favor, they return that plus the remaining difference between the risk and the maximum payout, which is $100. Okay. Again, we always have the option to just set a target here. And I think I had mine at 75 before. Place the order, and you can see it just put that gray box here. Okay, so that just tells us we have a working order sitting there. And if you want to see what the working order is, just click on working orders and it shows you the price right here, and it says $75. That's as simple as it gets, really. Okay, now why would you trade a binary option versus the Forex market? Okay, well, Forex market is actually traded on margin, and that means you can actually lose more than what you have in your account. It's a leveraged instrument. Okay, well, if I want to make more, I would just simply increase my contracts. I wouldn't trade on leverage, and again, simplicity. Know what your risk is before you enter a trade. That's why I love the binary options. Now, what works on binary options? Just about anything. If you want to use stochastics, then you can use stochastics. You want to use MACD, use the MACD. But you have to formulate a trading plan to work with it, okay? To identify what your entries are, what your exits are, okay? You can't go into binaries without a trading plan and think, oh, I'm going to just make a ton of money, okay? Because the market either goes up or the market goes down. Well, the market does all kinds of stuff, okay? You have to have a trading plan that says, okay, I'm only going to enter a trade when this occurs, okay? If you don't do that, you are probably going to lose a lot of money. And it really doesn't matter what you do. It does mainly depend on your discipline, how well you know your markets. Have a lot of books on like trading currencies. where I give you a lot of background information on the currencies. For example, the Aussie dollar. Okay, the Aussie is correlated with gold. Okay, if gold is moving up, more than likely the Aussie is going to be moving up because their biggest export is in mining, and that's the reason they're correlated with gold. Okay, but then on the Canadian side, the Canadian is correlated with crude, but there is a negative correlation between the US CAD and crude. Why? Because the USD is the first part of the symbol. Canadian is the second part of the symbol. So if crude is going, let's say crude is going down, that means the Canadian is going to be weak, okay? And the USD side would be strong, okay? So you would expect it to go up, not down. Another great reason to use the binaries is for market reports. And we have a ton of them coming out this week. If we go to Forex Factory, okay, and if we look at just this week, you'll actually see we do have a ton of market reports this week. And we're just going to look at the red ones. Apply filter. Okay. So we have the Bank of Japan outlook report, policy rate, and monetary policy statement tomorrow night. And it'll be, usually it's between 11 and 12. Sometimes it's 1 o'clock in the morning. Then we have the press conference. Tuesday morning at 8:30, we have the GDP. 10 o'clock, we have CB consumer confidence. Wednesday, we have reports on the British pound. Then we have the FOMC Wednesday afternoon. Then on Thursday, we have the British pound Bank of England inflation report, the bank rate votes, the monetary policy summary, the official bank rate. Then on Friday, we have the biggest report of the month. It's non-farm employment change. I love trading that market report. But again, using a binary option because this is a very volatile report, okay? And this report can actually move the USD JPY 80 pips between 8:30 and 8:45. Again, let's go back to strike width, okay? If you have an 80 pip strike width, how many strikes will it move if that's 80 pips in one direction? Okay, 4 into 80 is 20. It's going to go through 20 strikes. Okay, so if you went 2, 3, 4 strikes out, you're getting an extremely low risk trade for a potential to pay out significantly. Okay, and these are typically the ones that I trade because there's no way I could trade that using a Forex account. The risk would be too high. And I'll tell you right now, trading is all about managing your risk. It's really not about the indicators or any of the other good stuff. It's about managing your risk and having the discipline to only trade your plan and not just jump in on a whim. Okay. So let's go back to this one. And you can see it's really hasn't gone anywhere, but it's only about 2 pips from where our strike is. As long as this is moving in your direction, you may want to stay with it. Let's say it suddenly started to come down. Well, you can also exit. If you are going to exit that way, I would click on the gray box that shows the working order and just click on this bid price. That would modify your order. Okay. Now, they do have several currencies available, but it's not limited to currencies. I mean, you can trade gold, you can trade the indices, You could trade crude, you can trade Bitcoin. They have Bitcoin on the spreads. Doesn't really matter what you want to trade. The only thing that would matter would be your contract specifications. Let's say that you're only interested in trading the stock indices. Again, click on stock indices, go down to contract specifications, and you'll see exactly when, for example, the Wall Street 30, which uses the underlying Dow Jones. Okay, the intraday 2-hour begins at 10 a.m. That is the first expiration. Okay, and the strike width is 12 points. Okay, on the US 500, the strike width is 1.5 points. On the US Tech 100, the 2-hour binary is 4 points. Okay, so these strike in contract specifications will tell you and identify exactly what your strike width is, which is extremely important when it comes to, okay, how far out of the money can I go? Okay, I know 8 pips is 2 strikes in the USD JPY. That's pretty easy to get. But then again, if you come over and let's say you look at the British pound, okay, um, right now the current price where it's trading at the money is 31.12, but you could go out of the money at 31.02 for $20. What is the most important thing about that? Okay, can the British pound move as specified in that? For example, if we wanted to trade this, okay, we could do 31.02 right now. Well, that's a 6 pip move. Does it look like it's going to move 6 pips in the next hour and a half? Is it worth the risk? In other words, is it worth the $19 to see if this moves down? Okay. Now, why didn't I do above it? Okay. Because it's going to have to move 16 pips to go up. Is that likely? Probably not. I would say I would rather take the risk on the short side at $19 versus trying to get a 16 pip before any market opening on a Sunday afternoon. Okay. That's your difference. And you can get some bargains just by looking around if you're an advanced trader. And that's really all it comes down to. I mean, you can see here that the stochastics is almost at 80. Is there a potential for this to move down 6 pips? Sure. You're paying $19 to potentially make $81. Well, from a risk to reward ratio, that would make sense. Okay. Now, the next question I would have would be, can the market move that much within that specified time? And if I go and look at my document, I can tell you. Give me just a minute to find it. So in this case, we're looking at the British pound dollar. It's in July, and we're actually looking at it at 6 o'clock at night. So 6 p.m., the average is 6 pips. 7 p.m., the average is 5 pips. Yeah, there's a chance it could move that. Okay. And for those that are interested in those tables, the book I have on Amazon on currencies will actually give you those movement sizes per hour. as far as minimum and maximum. So you could also refer to that. Okay. And I mean, Nadex does have a lot of built-in indicators. Do I use the indicators in Nadex? No, but it's a good place for people that want to start trading. It's a great place to start because you'll find that you are drawn to one type of technical analysis indicator. With me, it's divergence. I love divergence because I believe it's a leading indicator. You just have to learn it. You have to learn to draw on your charts. But, there's nothing wrong with that. Once I'm in a trade, normally I'll go down to a 5-minute chart and I'll say, okay, should I exit here or not? This one over here would probably be a better example of it. If I go down to a 5-minute chart, we could have seen that reversal bar here versus waiting for it over here. I do have a free price bar video on my YouTube channel. So if you haven't watched that, I would really suggest it because price bars are the bomb. And that would have just allowed you to get out with a minimal loss versus, right now you have a $10 loss. Okay. And that's trade management more than, entry criteria. It's just, should I still be in this trade right now? Has the market conditions changed? And that's what a lot of traders, especially with binary options, you have a time limited trade. You can't sit with it all day. You only have 2 hours. Okay. So you really have to be on top of the fact that, hey, the market could have changed its mind, and it doesn't mean that your indicators are wrong. It doesn't mean you're wrong. It just means that the market decided to do something different. And remember, the market is a constant state of change. So it can change its mind at any time. Are you willing to listen? Anytime that I'm able to take a profit, always take a profit because that's my job. Okay. And that's the reason I'll go down in time as well. I'll go down and say, okay, can I do this or can I not? Should I exit this trade? Do I still believe that it's going to go up? Okay. And sometimes you can see just going down in time, you'll say, no, I think it's changed. So I'm going to exit. That's how you minimize your losses. Okay. And that's, all of the same trading skills that you need as a regular trader, you will need as a binary option trader. And the only difference to me is that you can manage your risk better by using a binary option. And that's what a lot of people don't understand. It's all about that risk management. Now, Nadex does provide a free demo account. If you go to trading platforms, you go to the demo trading platform. It takes you all of about 5 minutes to open up the demo. And, they start you out with $25,000 in practice funds. But if you trade that using basic money management, then you're probably not going to be trading that many contracts. Okay. Because number one, if you're trading, a $25,000 account, look at it like this. Are you going to put $25,000 in your real account? If the answer to that question is no, say you're only planning to put $1,000 in your account, trade that $25,000 like it was only $1,000. That means at any given time, you could not be in more than 1-2 maximum trades. Okay. A lot of people get all caught up in the $25,000 practice account. They're trying to trade, 100 contracts because after all, it's $25,000. Well, that's the wrong attitude to have. If you know you're going to put 1,000 in your live account, then treat your demo account just like it was a live account. Okay. If you tend to say, oh, it's just a play account, well, you're probably not going to learn a lot because it's just a play account. Okay. Treat it like it's a live account. You know, if you don't want to do it in your live account, don't do it in your demo. Okay. That's the easiest principle to go by. Let's see, what else have I not covered? Now, if you wanted to trade the dailies, they do offer 6 dailies. Okay. I don't do a lot of the dailies. I'm in for the 2-hour binary and then I get out. My focus tends to be about 2 hours, and that's about it. When you do look at the Nadex platform, they have some really good platform videos. But I mean, any of these, you can click on them. For example, I could click on chart and bring up, you know, the GBP USD. I could, you know, do away with the open positions, you know, the finder. All of this green is just telling me that I have it currently open. That's about it. You know, it's a pretty simple platform. You know, you can left click and scroll to open up the strikes. If you shift and just use your mouse wheel, it will either decrease the strikes or increase it, depending on which direction you're going. If you click on it and you left click on the chart, you can do the interval. For example, I could go up to a 15-minute chart just by clicking on that. You could go to types if you want a candlestick, which is my preferred one. You could also do the high, low, open, close. You could do just a line. I like seeing all of the information. Then you have drawings, and for example, we'll do just a horizontal line. So if I click on it, you see my cursor changes. So let's say that I want to put a horizontal line here. Then I just click where I wanted it and it was on there. Now, the one thing that for some reason I had to ask them how to do this because I kept trying to hit the delete button. But do you see how it's got little circles right here? They're very, very small. As long as you have that highlighted, you can click delete and it takes it off. You can also go to layouts. You can save your current layout. You can also do show. For example, one of the shows is high, low, open, close data. Okay. So every time you mouse over a bar, it's showing you all of the information. I don't like that because I use a different charting platform. But if you need to see that information, then it's there. Okay. And if you click again, of course, that gets rid of it. Okay. So it's really pretty easy. Binary options are really simple. And again, it all goes back to your strike statement. It's the most important thing on your chart other than the expiration. And it's really pretty simple. It's, do you believe that this particular market will close, or I shouldn't say close, but the indicative index will be greater than the strike? If you answer yes, then you buy it. If you answer no, then you sell it. I mean, that's really how simple it is. Okay. Which one indicates a buy? Blue. Which one indicates a sell? Red. Okay. How much will it cost you? You can calculate it. I mean, I'm pretty good at calculating the numbers in my head. But again, if you just click on it, okay, it's going to tell you right here, according to this price, if this is what your price is down here, then it's going to tell you your maximum loss is $17.50. The maximum profit is $82.50. Now, it will not be accurate. For example, let's look at the British pound dollar. If I click on this right now and I want to exit this position, you can see that the max loss is 85, max profit is 15. That is not accurate, okay? That is only if you are entering that position. So let's go back here. My price on entry was 81. Okay, we had $19 of risk. But if I exit right now, it's going to be right at $85. So, it is the difference that you will actually either be in profit or not in profit. Okay. If we go back to this, do you see all these numbers are red? Okay. They're under the bid. What does that mean for you? That means if you click on them, you're going to sell that instrument. In other words, you do not believe that the market will be equal to or less than the strike price. Okay. However, if you buy, that is on the blue side, it's under the offer, then that means you believe, yes, it will be greater than this number. Okay. Remember, okay, when you sell, it's going down from 100. Okay. So this number right here in red, that's showing you the profit potential. It's going down from 100 to 0. Okay. On the buy side, it's going up to 100. Okay. So in this case, $12 is the risk, and then your profit potential is 100 minus 12 or $88. And that's because this side increases, this side decreases downward. Okay. I hope everyone enjoyed the video tonight. If you have any questions, you can always send me an email at gm@tradershelpdesk.com. For some reason, I evidently set it where nobody could type in a chat message. So I'll try to fix that one on the next one. So y'all can type in chat messages and I can answer your question.